All right, guys, welcome back to another episode of The Deep End. This is number 55, and we are joined by the finance industry's favorite welder, our main man, Russ. Russ, what is up, man? Thanks for joining us.
Oh, what's up,
There he
man?
is.
Hey, what's up, guys? Welcome, bringing me back on the deep end for the first time. See? Doesn't make sense. That's how we roll over here. What's
How are
up,
things
Ari,
going in
Ryan?
Chicago, Russ? That was bad.
Oh my God, it's cold. I hope you like cold. We got plenty of cold. I'd like to export some of this cold to you over there in the desert, or maybe import
Man,
some of your.
how cold is it over there in Chicago right now?
Well, today we're having a little bit of a warm up. I think the real feel is something like -5, but a few days ago it was -40. So I
And
was
that's
working
a
out in
warm
that.
up.
Oh yeah, we're gonna get hit again. But hey, it's the weather. It's always changing, so kind of boring. So let's move on to something more interesting than the weather.
You know,
Yeah.
speaking of something
Okay.
that's always changing, I want to jump right into the market. The market's been pretty crazy with all the news and everything that's been going on. But also, Russ, everybody always hears Ryan and I talk about the market and our portfolios. Let's just kick it over to Russ, Ryan, if you don't mind, and just give us a status update on this portfolio and how the market turbulence has been wrestling with your portfolio.
Well, the market turbulence has been great. I mean, it's just been going up and up, and it's kind of gotten us, as we were talking, and you guys know, and some of you don't. I just hit $1 million net worth. Our family did. I mean, I want to take all the credit, but my wife is a huge part of that. And yeah, it's a net worth. We're still working toward an investment portfolio of $1 million plus. Like, that's the real goal. But hey, it still counts, right? And
Yeah.
as far as the market, too, I don't know. I can't control it. I just know that we keep putting money in, and right over many years, it's just going up and to the right. And it's about as close to a guarantee as you can get. Of course, we're talking about the market. Individual stocks within it are a little bit more volatile. So it's just been fantastic. What do you guys think? I mean, your guys' portfolios have had to been benefiting pretty well.
Yeah, I don't know the exact numbers on my end, but I think I'm up maybe around 6% so far year to date. And it's kind of cool because last year I underperformed the market maybe by about 7-8%, somewhere in that range. And I mean, so far this year, just from the returns in January, I've pretty much closed that gap, I'm pretty close to closing the gap between myself and the S&P over the past year, which is not an imperative thing, but it is a good feeling to see that. So yeah, it's been good so far. How about you, Ari?
I have no complaints. I will say I've definitely been going on the roller coaster ride because, the other week when Trump's talking about tariffs again and I'm now heavily into growth, I mean, I got hit pretty hard. But I actually love that. Obviously I did, right? So I threw a ton of money in. I made some big changes within the portfolio. One of those changes is, I'm slowly but surely doing away actually with the S&P 500. And I'm just going deep into tech. So I felt the other week when the portfolio just came plummeting down. But I ultimately knew, and I'd love to catch your guys' opinion on this. I ultimately knew that it was just a matter of time before Trump had another tweet that was just like, all right, no tariffs, and the same thing, by the way, as of this recording is happening right now with Canada, our friends in the North. And he's like 100% tariffs. And I'm like, do you guys think the vast majority of market participants are used to this by now? Or because we're still seeing big swings when he says this stuff. I just feel like it's like a game that we all should be familiar with by now.
Yeah, I'll say it's the de-escalate and then, or it's the escalate, de-escalate cycle. So actually now when you see the guy escalating things and the market goes down, it just looks like it's a great time to buy. Like that's the signal. Quite honestly, I mean, just escalate. As fine as long as nobody gets, wiped out. But yeah, it just goes to show you that those dips. I think the co-founder of Home Depot had said that every year there's about 8 days out of the year where their stock just has such big gains, but they never know when it's going to be. So it's kind of the whole thing. Like you just have to stay invested. And obviously you guys talk about it's staying in the market and not trying to time the market. So we don't know where things are going to go. Nobody knows. Nobody knows the future. So that's why, obviously, I always feel like saying, look, if you ever hear me make a prediction, just insert wild speculation as a caveat to that. So, but yeah,
Yeah,
I'm just staying invested and, dude, that long-term foresight, trying to use that.
exactly. That's what I was going to jump in and say is no matter what's going on in the short term, it really just comes back to that. Remember, at the end of the day, we are business owners, and as business owners, technically, you should have a long-term mindset. Just kind of like you're buying a house. You're not worried about the day-to-day fluctuation in the value of your home. And so I think that, as business owners and thinking of it that way with a long-term mindset, you should think about it the same exact way. It's the same principle. And so with that said, whatever noise happens in the short term, use it to your advantage. That's all you can do.
Yeah, you know what I also love though the other week, again, I just we hardly ever get this like real time at Davos. I don't know how much you guys watched the Davos talks, different CEOs and the politicians that were there and stuff. Just insanity. But at one point, Trump literally goes, "It's a great time to buy to buy in stocks," and then it was 2 hours after that he said no tariffs. So it's just crazy to me, to kind of watch this stuff. But it's also crazy to me to just still see, I shared something on Blossom the other week when the market was dipping down. And I basically shared something to the likes of like, I'm happy. Like, I'm happy that this is happening, obviously, because you get to buy the stocks on sale, right? I just want to say, like, he was definitely newer to investing, was like, why would you say that, man? Like, why would you wish people, anything other than success? I'm like, well, I'm not like wishing people, ill. Like, but like the reality is for every buyer, there's a seller. For every winner, I'm sorry, guys, there's a loser, and like the winners are the long-term investors. Was I being too harsh, or is that on the money?
Well, I'll jump in. I think it's right on the money, dude. So we were in London this last year in 2025, and we didn't go in, but we saw St. Paul's Cathedral, and I'm a history nut, so I started looking into it. Dude, the thing was built in 1207 by the Normans, and it was 150 years later. No, 1087 it was built, and then 150 years later is when it was finally constructed and they started using it. But it's so cool because that building, through Revolution, the Reformation, it sat there for 400 some years. 1666, there was a great fire of London, completely destroyed it. 2 years later, they started rebuilding it. And then in like 1711, I think it was when it was finally the version that we see now today. But it's that foundation. Like, it's so crazy to me that any cathedral, architects start building it, and they know that they're not going to get to see the pretty stained glasses hanging in the windows. So it goes through, I just think of my portfolio like that. If you want to build a great cathedral, you have to have that foundation. And a lot of people just want immediate. They want now, right now. So I don't know, this ties into what you're saying, but for me, it thinks about long term. So a lot of the short term little storms and market noise, I'm still working on the foundation, building it, right? They said there's a saying that the deeper the hole, the higher the pole. So if you want a big spire, a big cathedral, you have to have a bigger base, deeper foundation. So I know it's weird, right? We're looking at St. Paul's Cathedral, and all of a sudden investing pops in my mind, and how that relates to investing. It's cool.
That's true love for the
that.
game.
No, it totally does. I'll bring it back, but I do have, in hearing both you guys talk, I have three thoughts. First and foremost, whenever I hear Davos, this is random, but I always think of Sir Davos from Game of Thrones. All the you Game of Thrones fans out there, I don't know if you guys watch that show, but there's a character in there named Sir Davos, which I always thought was just a funny name. My brother and I joke about it all the time. Also, Russ, the Cash Flow Cathedral is a great name for your portfolio if you're ever looking for one.
Yeah.
But the other thing I was going to say. Oh, go ahead, Ari.
You go ahead.
Go ahead. No, I'll circle back. It's okay.
I was just going to say what Russ said was fascinating to me. Dude, you just said that you're still building the foundation, yet you opened up with you have $1 million net worth. So I mean, can you go deeper there? Like some people out there would be saying like, Russ, what the heck are you talking about? You did it. So what do you like, but you're still building the foundation. That was just such an amazing snippet there that I hope everyone captured.
Yeah. Well, again, we want the foundation to be an investment portfolio that belongs just to my wife and I. Currently we have, it's on, don't tell them, almost 200,000 for our kids' college. And dude, that was small. I started $100 a month for each kid. Like as soon as we found out my wife was pregnant with the first one in 2006. I just started putting away $100 a week, and then got a 529 going. And to this day, I bumped it to 100. I said 100 a month. It's 150 a month now for each kid. So 300 a month. And dude, it wasn't always easy. Back then, like putting that money away. And sometimes I didn't contribute as much to our retirement as we should have. But, so I'm thinking about what we're going to live off of, right? Because that's money they'll use for college. That's theirs. I mean, the equity in our home, I can't use that for daily bread, right? Unless I take out a HELOC or a home equity line of credit or something like that. So yeah, it's
which
just
is something
thinking
people
about,
do to buy stocks, which is crazy. Sorry to cut you off, but
yeah, I know. It's
That's a whole
just
nother
thinking
can of
about
worms.
Episode.
right? Yeah, borrow to buy. No. Just what can we take off to live every day? Because it's cool, like seeing that number on paper. But when I get granular and look at it, I'm like, well, there's not a lot there because I'm 40. I'll be 48 in April. I can't touch the retirement funds yet. So what are we going to be able to live off of? Because I don't want to work out in, negative 40-degree temperature many more times. So it's just building that bigger foundation. And again, it's like, dude, Ryan's newsletter, I loved it about Got 'em Bait and the, oh my gosh,
I know you listened to that episode too.
Oh, I listened twice. I loved it, dude.
Yeah.
It just goes to show you. And like he was saying, is that your winners will far make up for the losers because the downside of the losers is zero, but the upside of the winners is there. It's infinite. It can go as high as it wants to go. There is no limit to how high something can go. So, it's just building that. What we can live off of is what's going to matter ultimately.
Let me ask you something. On that note, what do you think that means for people, kind of what you were talking about with the asymmetric power of compounding there? What do you think that means for people who are maybe just getting into investing or thinking about starting to invest but are concerned about valuations, or generally anyone who's concerned about buying stocks at certain valuations? Do you think that the power of compounding, do you think there's a message in there at all? A takeaway in there?
Of course. I mean, when in doubt, zoom out. And obviously, in one day, something can fluctuate 5-10%. But when you zoom out and look at the overall trend, again, I think of it in two ways, because there's the market, right? When you're buying an index, and then when you're buying an individual stock, which is way riskier. And it's funny. I just started reading Jim Cramer's How to Make Money in Any Market. I know a lot of people crap on the guy, and he's whatever, but the dude's been doing this for over 40 years. Like, he has to have something interesting to say. And kind of his thing is that you should have half of your investment portfolio in an index fund, and then you should also pick 5 stocks that you think are going to do well, and then one hero like moonshot stock. So I'm still getting into it. I just started. I don't know how much I agree with that, but his point is that the market is just average, obviously, but when you have individual companies, and he's not talking about penny stocks, right? He was mentioning buying when everybody was using Netflix, Apple, Facebook, Amazon, just putting money into the companies that are already winners, but still have a lot of room to grow, that you can really become rich, because you can, build some nice wealth with an index fund. But, and again, we'll see what he has to say at the end, but but that ties in with Got 'em Bait, and there's no limit to how high something can go, and you can just make literally generational, life-changing money doing it that way.
Russ, is that book an autobiography?
No, it's just he's supposed to tell you how to make money in any market, and it says he's going to go through like the balance sheets and the income statements, because a lot of people just are told that you only should buy an index fund and that's it. So. We'll see. I don't know.
Does he talk about the strategy of doing reverse Jim Cramer?
No, but I did hear him on a podcast where he said that the fund, and I don't know if you know who it was, but the reverse Jim Cramer fund went out, like it went under. So he actually he should have shorted the reverse Jim Cramer fund, and he would have done well. So talk about some mind twisting stuff there.
Say it would have been hysterical if he actually was supportive of the reverse Jim Cramer. So anything he says, he's actually just not investing in that anyways.
Yeah. So
Rumor
we'll see.
has it he was the one who started it.
Yeah. But no bad press. What is that saying with press? I'm completely blind. I'm going to butcher it, and I just messed it up anyways. Regardless, I don't think there's any bad press, right? To have your name out there draws attention to you, and ideally it's not bad press, but I do think there's something to be said about a guy who's at least putting himself out there all the time. But here's the other thing about that, and I think all three of us can attest to kind of feeling Cramer's struggle at least some of the time, is the fact that we're all putting ourselves out there on the firing lines of YouTube and Instagram and elsewhere, and sometimes we're wrong. And so you have to realize, if you're a viewer out there, that Ryan, Russ, and myself are all just like any other investor out there, including Cramer. Like, we're all trying our best to understand the market, invest. And I feel like people just think because you have a following of any size, it's like better, more, you're a market god, so to speak. Have you guys felt that type of pressure when you put content out?
You want to jump in, Russ? Or you want me to take it?
Take it, and then I'll follow.
Yeah, there's certainly that pressure, and it's interesting because I've actually been thinking about this quite a bit lately, in terms of being wrong. What does that really mean? Like, being wrong, I guess, like losing money and locking in losses, right? And I think of a few examples in my portfolio where that's been the case, where I've been wrong and I've lost money. Two that come to mind are 3M and AT&T. I think those were my two biggest losers. AT&T not so much on a total return basis, including dividends, but just talking share price for sure. That and 3M. But with that said, if I would have just continued to hold on to those companies, I actually would not have been wrong. I actually would have been right, because now they're, I don't even know if right's the right word to use for this either, by the way. Semantics. The semantics are so interesting. I think they're important. But I think that maybe where I went wrong in those, number one, the thesis was wrong from the start. So yeah, that wasn't great. But also not having the wherewithal to hold strong through a turbulent period, that was also wrong. So I think when we think about whether we're right or wrong, I think it has to extend beyond just the share price, the outcome of the share price. And you have to look more so at the decision making involved in the buying and the selling. And I think that, I think that when it comes to being wrong or being afraid to be wrong in putting yourself out there on the internet, I think those are the things that I try to be the most mindful of, is the process and the thought process going into these investments and the decisions that I make in buying or passing or whatever. Because the share price part I can't really control. And kind of like we've talked about so far, and clearly based on my experience with those two stocks, the timeline is a huge determining factor in whether you look right or wrong for a certain span of time. And so I think the most important thing, and really like the biggest takeaway from anyone watching, I think any of us, is how are they thinking? How are they making their decisions? And that's the thing that I'm really trying to improve on over time, as I think we all should. And hopefully that will, result in better returns and less permanent losses of capital. I don't know if any of that makes sense or answers the question, because I kind of was all over the place with that. But am I making sense there?
Yeah, you know what? Annie Duke popped into my head thinking in bets where you're trying to not focus on the outcome, but on the decision. That's the most important thing. And it's so hard because I've been in the same boat with you with, oh my God, where I start, AT&T, 3M, Intel,
Russ,
Nexstar,
Intel, yeah.
Johnson & Johnson. I sold these stuff. I lost the conviction. I sold them. Well, not so much J&J. That one I've talked about. That was in our taxable overflow account. We needed to buy a car. And when I looked at stuff that I wanted to sell, dude, J&J had chopped sideways for years. And I was like, all right, maybe I'll eventually get back in. I sold that at, I think I had 125 shares. I sold at $144. Yeah, it's like 220 now. I'm just like, if I would have just held that, but in my mind at the time, we don't know the future. Same thing with Nexstar. I sold that to, again, Ryan, we talked about it. I lost the conviction with the company. I feel it's a melting ice cube. They keep acquiring other melting ice cubes. Now they're a bigger melting ice cube, but that cash flow, right? They still improved it. And unfortunately, I sold that thing in the 170s, the 180s, and now it's 220 also. It's right around 220, 215. So again, we don't know the future. And Annie Duke would teach making the right decision. She would equate it to poker. And when she was trying to get people to make the right decision, she wouldn't show them the outcome of the hand. And that drove people nuts. They're like, well, I want to know what happened. She's like, no, it's not about what happened. It's about making the right decision and not knowing the outcome.
Yeah, and to your point, man, on all of that, I think Intel is probably the most shining example of all of this, at least for you and me, because we sold it roughly. It's so funny. We make pretty similar moves with these companies at similar times. We've done it with Intel. We did it with Starbucks as well, I believe. But in the case of Intel, I think we sold it at a pretty good time. I think we both locked in some slight gains at least. I think you more than I did, actually. And, at that time, it looked like a really good decision because after that, I think it dropped down into the 20s, like the upper 20s, and it stayed there for a while. But now look at where Intel's at. It was recently above $50 per share. And so someone looking back on that might say, now with the benefit of hindsight, might say, you guys screwed the pooch. You were so wrong about Intel. How could you have sold it? It's obvious it would have gone up to $50 or $60, whatever it peaked at. And so today we could look like we have made the wrong decision. But I will tell you what. This goes back to the process. Ultimately, I still think it was the right decision because if you think like a business owner and actually look at the business, to my knowledge, there isn't really anything positive that changed about the business to drive up the share price to where it's at. It's just, there's been some macro stuff. Once again, some volatility with politics that have come into play that have impacted the share price. And, I don't think for that reason specifically, I don't think you could just look at the outcome and say whether or not a decision was quote unquote right or quote unquote wrong.
Dude, the business was struggling. Sorry, the business was struggling. They cut the dividend. They were hemorrhaging money and I was like, wow, I'm so glad I got out. Even after I sold, looking back before politics entered the conversation, entered the chat, and started help propelling it higher, dude. It was just I didn't like the business. I didn't like the direction it was going. They fired Pat Gelsinger basically. And so, yeah, but it goes to show you could make the right decision and then it still has the wrong outcome. So.
Say who didn't. I don't know. I'm not going to use. I like Ryan how you said it's not right or wrong. It's just it's a decision that you're making based off some thesis that you have. But who had the conviction in Intel this whole time? You both know him very well. Can you guess?
Who?
PPC Ian.
Is he still holding Intel?
Man,
I thought it was IBM. Yeah. Where is he in Intel?
No, was it Intel or IBM?
I know he has IBM.
He's in Big Blue. Yeah.
Was it IBM? Oh damn. Okay.
Call him
I
up.
was gonna say, man, I remember having him, on Masters, and he was just like, I'm holding on and holding on. But that's, I respect someone's process like that. Even if it is an Intel situation, Ian's IBM or whatever, a 3M. At one point we all even I had AT&T, And so I like the point, that's taken here. It's like, hey, based on the circumstances today, I was just going through this with United Health. I am still bullish on United Health. I think long term that is a great horse to pick. But for me right now, based on my strategy and how I'm trying to pivot my portfolio, it no longer fits the prerequisites to stay in my portfolio. And so I was debating, I already sold a good chunk of United Health because I'm debating in my head, I'm saying, long term, I just believe that this is, going to be a player that's going to be on the comeback. They've been going through struggles. They remain in a struggling position. But I believe with time and the handling of the PR crisis, and a lot thanks due to their new, the bringing their old CEO back off the bench. But again, I look at how my current strategy is, and I'm like, United Health just it's not going to fit anymore. And so I was saying, do I want to take the L right now? I'm taking an L. And I'm rendering, yes, I want to take an L. But this is also how I'm thinking. Ryan, I say this all the time. And Russ, you heard me say this outright at Blossom with the mic. But like, billionaires aren't afraid to lose money if they have to, in order to pull the trigger, execute on something better or more suitable rather for them. And I feel like at any time, if you're afraid to walk away because of a maybe situation, you're already on the wrong path.
Yeah, well, hey, you just reminded me of something, a middle-class mindset where this is the way I was raised. Money was scarce, and you had to be very, very careful with what you did with. When you got a nickel come your way, you better hold on to that thing with vice grip, death-like hands. Like, you don't let go of it, right? But honestly, as I read and, like you said, study some of these successful people, money is the most renewable resource on the planet. You can always get more money, right? Like they say, time is the most non-renewable. The most renewable resource is freaking money. Like there's so much out of. That's why people have. You guys probably have read the stories about how many people went broke 2, 3, 4 times, and then they make it because they just get. There's always more money you can get.
Alchemy,
what do you
man.
think creates like the scarcity mindset so deeply inside? Like, is it just the upbringing and environment? Or is it really experiences, like after people have been burned pretty badly?
It's all of it. It's education. It's the way people were raised. I just listened to Jeremy Grantham, who was on with Josh Brown and Michael Batnick. And dude, he came up in a time when there was a lot of volatility in the market. So he has a different mindset about it, as opposed to somebody that's made a lot of money with GameStop. Like you buy the meme stocks and they just go up. And it's funny, like you hear people, they'll say like, if you're not doubling your money in a month, what are you even doing, bro? Like, right? So it's two different types of people. But speaking from where I came from, it was just maybe a lack of education, lack of financial education. And yeah, it's just money was something that was scarce and hard to come by. So you couldn't take calculated risks with it. You had to almost have a near guaranteed return on that money. But it's the uncertainty and the risk, right? That's really going to make people money. So.
Yeah, and to your point, people are going to look at it. Different people are going to look at it different ways. Someone who started investing in 1929 is going to look at the market differently than someone who started investing in like 2023. And this is where, kind of the semantics become important too, and that nuance is because, in talking about this stuff, you have to allow for those different perspectives. And as Russ likes to say, there's more than one way to financial heaven. And I think it's easy to talk about certain things as if it's just like the inherent nature of that thing. Like, for example, I got a comment on one of my videos the other day, yesterday actually, that said, dividend investing is for old people. Talking about it as it's exactly fact. There's no question about it. This is what it is. It is the nature of this thing. And on the other side of that, and I've probably been guilty of my own version of this too, but on the other side of that, we can look at something and say, we can look at day trading and say, day trading is risky. Growth investing is risky. Buying individual stocks is risky. And, talking about it that way, it doesn't really allow for much context or much nuance. And I think we see it all the time, especially on the internet. And I don't think it does a lot of favors to talk about things that way, because there's so many variables at play all the time.
I think we do a great deal of polarizing, like these days. There's no middle ground anymore. Like, I feel like even like hybrid investor is rare, right? Like we just don't hear that. There's something, and maybe it's not just our days of today, but like I feel like there's something innately driven in like the human psyche that's like, you have to pick a side. You can't be comfortably sitting in the middle anywhere. And I feel that's a shame, because the hybrid investor, that works for people, and they do great that way. And it really is, I liked way back when someone had shared with me that at the end of the day, your portfolio is your scoreboard. And as long as you're winning, that's all that matters. Could you be up by more? Yeah, potentially. But you could also be down by a lot more. So it's just like, are you beating the S&P? Are you beating your benchmark? That's your scoreboard. And if you're doing well and you're beating whatever your benchmark is, then you're fine. And I think we have to keep that in mind. But it is interesting when I see, like Ryan, to your point, it's like, that's why I don't define myself as an investor anymore. I find that to be actually, a bit pointless and almost idiotic. So if I'm just a dividend investor, I can only invest in dividend stocks. And if I'm just a growth investor, I can only invest in growth. That's crazy. I don't know one person on Wall Street who talks like that.
You took the words out of my mouth. It's tribalization, right? And I do. That was early on when I said I am just a dividend investor. So guess what? I didn't invest in Amazon, Tesla, Nvidia, because I remember I joked you need a microscope to see Nvidia's dividend yield. At Broadcom, same thing. Costco, I love Costco, and I said that dividend yield is so small. I'm not even going to give. It's not even worth my time when it was $400 a share, and instead I'm buying AT&T. I'm buying Verizon and and it's just that's the thing is. I've learned as I'm getting older, when you label yourself as something, you're literally shutting doors to other opportunities and closing your mind off to other possibilities. And Charlie Munger was fond of saying, right, you shouldn't take a position on something until you can state the other side more clearly than they can. Because in that process, you might realize like, oh, hey, actually, I'm wrong about this, or I might not be so sure about that. So yeah, it's tribalization, man. Spot on.
What's funny is like today, people, these with these funds that are coming out now, people would say that actually the dividend stocks that you guys have in your portfolios, like, you guys call yourself income investors? Like, try yields of like 90,000%, then call yourself an income investor. It's a new tribe
tough,
on the block.
Man. No, it really is tribal. I don't know. I don't know if it's always. I haven't been in the market long enough to know. If this has been the case. And for you guys tuning in, if you have any insight or opinion on this, drop it in the comments, please. I don't know if it's always been that way, if it's always been this tribal, or if the advent of social media and all of these different products coming out and kind of people, putting themselves in these different camps. I don't know if that's become amplified over time. Do you guys have an opinion on that? Do you have any insight on that? Has it always been this way?
Yes.
Yeah? You think so?
Absolutely. Oh, yeah. Yeah, and it's just social media amplifies it, right? I mean, because that's the way our brains are wired. As mammals, we want to be part of that tribe. We want to be part of the herd because there's safety in the herd. And it's like here in Chicago, the Bears just lost the playoff game against the Rams. And I saw a video like after the game, everybody was chanting Green Bay sucks. Like, but they didn't even play Green Bay. That's how like tribal it is like they just like, yeah, we lost to the Los Angeles Rams, but Green Bay sucks. That's what we're 100% sure of, and we know. And I just thought like what are you doing? And that's the same thing when I thought of myself like, no, I can only buy dividend stocks with yields north of 3%. That's crazy. I've left so much money on the table by doing that. And it's hard to say like, I think I was wrong. Because especially when we're like us broadcasting to the world and then you have to do a 180 and say, I may have been wrong there.
But I think
Green
that's
Bay
the great
still
thing.
sucks.
Yeah. But I think that's the great.
You know what? I was a big Green Bay Packers fan actually back when they had Brett Favre and Amont Green, right? Like that was my go-to duo. But Russ, to your point, I definitely agree. I think it's only amplified over time because of social media. What was really interesting when you think like back in the day, you had to call your broker or, people didn't really, we'll put it this way. No one had the ability just to have in the palm of their hands the power to quickly make a decision. And I think that power that we have is deceiving us of like the reality of our situation. Like we think we are the Warren Buffetts of the world because we have the power in the palm of our hands. And it's so foolish. And I also just think because a guy like Charlie Munger made that type of statement, that goes to show that it's always been like this. It's just getting, I think, amplified and worse because of that amplification over time.
Dude,
And to your
100%, 100%. Sorry, Ryan, but yeah,
No,
you
you're
just
good.
made me think of. Ian did say this, like your portfolio is like that bar of soap, right? The more you touch it, the smaller it gets. But with the zero trading fees, imagine if you wanted to handle the bar of soap, but every time you wanted to touch it, you had to pay money to touch it. You would think a little differently. I know I would say, like, do I really want to make this move right now when it's going to cost me money to make it? I would probably do less touching of that soap.
But I think, having the power to constantly rearrange your portfolio if you wanted, I think if you can control that and have the willpower to avoid that, I think that only is going to benefit you in the long run. And so it serves to benefit the long-term investor, but it serves as a detriment to the short-term minded investor. I think there are so many different examples of that in the market, especially with some of the products coming out. And there are so many different ways that we have to kind of fight against our own innate human nature. That's certainly one of them. But going back to what Russ was saying earlier, we are constantly putting ourselves in a position with this investment stuff where we are going back to being right or wrong, where we risk the possibility that we have made an incorrect decision one way or another. And I think that's the great thing about doing this, though. I can think of few other things in life that are so, I don't want to say humbling, but it doesn't matter who you are. The market just does not care. And I think, once again, from a long-term perspective, if you put yourself in those situations where you risk looking like an idiot or making a wrong decision or losing money, as Russ would say, it's the cost of tuition. If you can put yourself in those positions and learn from those lessons, like, that's only a good thing, right? That's only going to serve across a long, long lifetime playing this infinite game. That's only going to turn you into a wiser, better human being over time. And I think when you get to the root of why we're doing this, yes, it's to build wealth and money, but I think that other part, that personal development part, is just as big of a benefit of doing this. It's just as big, if not an even more important result from it.
100% agree. I always go back to the book, The Infinite Game by Simon Sinek. And he obviously talks about this, you're either playing the finite game or the infinite game. And yeah, to Russ's point, when you're talking about building the foundation of the cathedral, the most beautiful part of the cathedral is the stained glass windows, in my opinion, right? Maybe it's the spire for others. I don't know. But the windows are so beautiful. But when you're busy building the foundation, man, you're not even thinking about the wind. Like, yeah, maybe you are a little bit, but like you're focused on this foundation. And so I think what's beautiful about that approach is block by block, you're laying that foundation, and you will never really get to see if, like, the true infinite game, the ripples way, way down the line of generations. And I know right now, no matter how much work I'm going to put in to build up my portfolio, I am not going to, nor do I want to either, reap all the reward and benefits of building my portfolio. I actually genuinely at my core want to be the first person in my family to amass wealth, to pass it down, all of it, right? And you listen to some of these these families who have built trusts, and okay, sometimes you mock the trust fund baby, and he didn't make it or she didn't make it. But you know what? I look at it differently. First of all, it's a blessing to be able to pass that wealth down. But it's not about so much as receiving the wealth. It's about what you do with that wealth. And so the next question becomes, hey, the real magic is being able to then raise your kids properly to understand wealth and how you use the wealth to make the world a better place. And like, that's really like, for me, how I think about it is like, I want to give wealth and also the teachings of generations to handle the wealth, grow the wealth, and continue, to make the Gutman name, allowing this Gutman name to continue to make the world a better place. And that's kind of how I look at it. And but you get I feel like people, yeah, who get the trust funds and they just take the money and, you know, they don't really work or anything like that. And I say, shame on those parents and the generationally speaking who are not teaching, I think, the more important lessons that come with the trust fund.
It's like the Vanderbilts, right? The Vanderbilt fortune was gone in a few generations after. I don't know if you guys, was it Titan, right? Titan was about Cornelius Vanderbilt.
That was Rockefeller.
Rockefeller. I get them confused, dude. I read so many books. It all
I think
starts.
Vanderbilt was the first tycoon. I think was Vanderbilt's book.
You're right. I've read them both. But yeah. Anyway, it's like that fortune was gone because the kids just got the money. They didn't have to earn it. They didn't put any sweat equity into it, and they didn't respect it. And they wanted to maintain a certain appearance and lifestyle. And before you know it, all the money's gone. And
yeah,
Anderson Cooper, he's one of the Vanderbilts. I think Gloria Vanderbilt was his mom, so he's one of the descendants. Mm-hmm.
Wow,
yeah, and to your point, Russ, in the Vanderbilt family, like it was well established that like the whole point of that money is to be ostentatious with it. It was a competition, not just amongst other families, but even internally within their own family of who could spend the most money or build the biggest house, or throw the most elaborate party. And that was, to them, that was the whole point of the money. And it was interesting. I just read not that long ago the richest woman on, or the what is it? You know what I'm talking about? It's the Hetty Green book. Anyway, it's a biography about this lady named Hetty Green, who is, you know, like the female Warren Buffett of the Gilded Age, and she or her daughters or whatever, her daughter would go to these Vanderbilt parties. So you got a little taste of that in that book, and her disdain for, you know, that approach to money. And it's a good lesson to learn. Like, it's a really important lesson to learn, and it's not an uncommon one either to have that wealth end up like it did with the Vanderbilt family. What's the saying? Usually, it's gone after 2 generations or something like that. I could be butchering it, but it goes quick because people don't pass down those lessons and teach the next generation how to be a good steward.
So with that said, I'm curious to have both your takes on this. Warren Buffett's kids, I mean, talk about a man who's amassed a great fortune, but leaving his kids, I think, only $1 million each, right? If I'm not mistaken. Do you guys think those kids should have gotten more, or do you side with Buffett? Like, just $1 million is good.
I like it. And I don't remember if it was Warren or Charlie that commented on that. And Ryan, you might remember the exact quote, but it was something to the effect of, you want to leave your kids enough money so they'll be comfortable, but not so much that they don't have to do anything. So you gotta like find that sweet spot. And then Charlie would say, well, you have to leave them money because if you don't, they'll hate you. Like, I think those were Charlie's words. So it's not an easy thing. Like you said, there's gray areas. There's no black or white, right? Everything is shades of gray. So yeah, what do you think, Ryan?
You know, well, yeah, that the quote was spot on. And I don't know that I have a real serious opinion about it. It's hard for me to like put myself in their shoes with that amount of money and really know what the right decision is. They certainly, you know, would be just fine if they each got $1 million, or even if it was a cool billion. Like, it's, you know, that's pretty generous, I'd say.
Cool billion.
But you know what I think? I think it would be really cool someday to have enough wealth where it would make sense to, like, you know, have my own little family office, and then the job just becomes managing that wealth, you know, for myself. And then, you know, hopefully the next generation, whether it's, you know, my kids or whatever, or their kids, whatever, would maybe have an interest in that and want to join in on that, you know, and that's kind of the family business is managing the wealth and learning how to be a good steward of it. But that's just the job. And that's probably wishful thinking. It's probably not how it would work in reality, but I always, you know, think that would be a pretty cool way to, cool thing to do with all of this wealth and hopefully keep it growing. I mean, I don't know if that made sense.
Yeah, 100%. You know, there's families, I like that they do this. They build the family trust, and then if someone wants to use some of the money, they will loan it out to them. So you could take the money, but it's going to cost you interest. And I think that's a pretty cool idea. But, you know, again, it just goes back to saying, as long as you're teaching the lessons of wealth, that's more important than giving wealth. And I think a lot of us just fail to pass down those lessons. There's a story, I don't know if it's true or not. Just read it on the internet, so who knows, right? But Bill Gates, as the story goes out to a diner with his daughter, and at the end of the meal, Bill Gates only tips like 20%. And his daughter's basically like, well, what the heck? Like, we're wealthy beyond. Like, why? Like, just drop her some more money. And Bill Gates, his reply is along the lines of, well, you don't know what it was like to have grown up with almost nothing, and I do. And I thought that's a unique story, and I don't know if it holds any weight, if it's true, but I think that is why, like, for me, I always go back to my grandfather. Actually, just in the other room, I have all my grandfather's pictures and memorabilia, and I just keep his story alive. I'm really big on legacy, but something he was big on was like legacy and passing down stories of our family. And my grandfather, actually, believe it or not, he had his own website for investing, and he did write a book on it. It wasn't like a crazy popular book, but he was very much into money management, and that was all passed down, at least, to me. I don't know what happened with my siblings, but that's what I think is important, is the lessons of wealth. And I think we really do fall short there. Did we just get lazy? Like, what I just, for me, I don't get what happens.
You know what? Morgan Housel popped in my head when you were talking, and I think he's the one that would say that he'd realized or discovered money has two uses. It's either it's a tool. It's a tool to either make your life or the lives around you better, or you can use it as a measuring stick against other people that have money. And, one way is probably going to make you a lot happier than the other way. But, you mentioned your grandpa, and I thought about mine. My grandpa was born in 1914, so he was a young dude when he went through the Great Depression, and we have no idea what that's like. We will never know. But I remember that they used to save everything. When he died and I had to clean their house out, dude, they would save Christmas lights, anything that was broken that could maybe even be fixed. Like, they had a very hard time throwing things out. And, not to the point of hoarders, but again, I think some of that was instilled in me from that middle class mindset we talked about, where like money can go away at any time. It's very hard to come by. So when you get it, make sure you hold on to it with an iron grip. And as we talk, I think of Ryan with Zoetis. I mean, I looked the other day, I think I was down almost $2,000 on Zoetis, and I'm like, that's kind of crazy. Like, where I grew up and came from, people would freak out at that and say, like, never again. Like, what are you doing? Like, you're nuts. So, yeah.
But what's funny about that, Russ? What's funny about that is people would fixate on your losses or your unrealized losses with Zoetis, but they won't give you any credit for your gains on Harrow. Mm-hmm. Which I would imagine have far surpassed, going back to the asymmetric power of compounding, have far surpassed the unrealized losses you've seen with Zoetis.
Yeah, I'm almost up, I think like almost 200% on Zoetis. Oh, you want to talk about a funny one with the tariff tantrum? My Soxel experiment. So Soxel is a 3 times leveraged semiconductor ETF. It's supposed to be for daily trading because it resets every night. They're like, you don't hold it long term. I saw it was coming downtown right in April, and I bought 10 shares. I could have bought 100, but I was like, I was too chicken. I bought 10 shares at $9.50. And that was in April of 2025. And I said, I'm going to hold this for a year because it's $95 was my risk, right? I mean, it's not nothing, but I was like, we'll just see what happens. Things up, it's $62 right now. I mean, it's crazy. 400% gain or something on it. And yeah, and everybody's like, you can't hold it. Anyway, it's opportunity, right? You have to look for those opportunities. We don't know when they're going to happen, but I saw that it was in the 60s and now it's under $10. So, that's my little experiment. And I'm not selling till April, so all the gains will be, who knows? Maybe probably go back down to $9 by the time I sell it in April. So, I don't know where it's going with all that, but something good in there, right?
That's all I could say is, when it comes to these reset daily funds, and there's a lot of them that are out there now. I was actually just talking to someone earlier today about them, and lack of research, lack of understanding of the prospectus and reading the prospectus. I think a lot of these funds there's power to them. There's great power with them if you know how to use them, to your advantage. And I'm always just blown away by people who invest in 2x, 3x, but yet they will actually, Russ, just hold on to them. But the thing is this, they won't say what you just said. You know that they're reset daily. These people have no idea. And it's sad to me, but talk about a cost of tuition.
Yeah, and I know exactly, like I said, I know it goes up 3 times as fast and down 3 times as fast. And, speaking I told you I can find investing analogies in almost anything. I was reading about animal urine, right? People that deal in wolf and coyote animal urine, and they sell it, and hunters usually buy it to disguise themselves. So hunters will put it on their boots, on traps, whatever. They'll use fox urine because to deer in the animal kingdom, the scent of fox urine it's like nothing. It's completely disguising the danger that's going to come to them. And they'll sometimes walk toward the hunters because they think there's nothing to worry about. But this guy that runs this one business, he noticed that gardeners were starting to buy urine, they were putting it in their gardens, fox urine, wolf urine, to keep the rabbits away. But after a while, the rabbits start to catch on and notice that there's nothing there. It smells funny, but it's actually safe. So I was like, that urine is a signal in the animal kingdom, just like yield can be a signal in the investing kingdom. So a lot of times when you see that high yield, you better think it's not safe, and there's probably something real bad coming after it, so you can't let it fool you. But then there's other times with Altria or some things, you can't let that high yield scare you off because they're designed. Some BDCs are designed to have higher yields, and they pay those. So those are the ones that are kind of the rabbit around the garden. It's okay, it's safe-ish. I don't want to say it's safe, but anyway, there you go. So urine and investing, that's where we get to.
That's a fantastic point, man. And it goes back to the whole semantics, because how often have you seen comments or heard high yield stocks are risky? You can't just make these blanket statements. You have to look at the nuance. You have to look at it on a case by case basis. You can't just label things flat out across the board. High yield is this, growth stocks are that, day trading is this, dividend stocks are so and so. Even on our end, in covered call ETFs are adjective. I think that the theme for 2026 and beyond is to move away from these labels and maybe change how we're talking about things. Less absolutes, more allowance for wiggle room, because it always exists.
Yeah, and then actually I wrapped it up by talking about Toxoplasma gondii. It's a virus that infects mice brains, and it rewires them to go toward the cats. And the way that the Toxoplasma gondii virus replicates is in cat intestines. So how does it get in there? Well, it's like that cycle. The mice goes, their brain gets infected, gets rewired. I was like, hey, this is like people with, no offense if anybody listening buys these, but I think people that get yield hungry virus, they go after yield max. When I'm running away being like, danger, 93% yield, danger. Other people are like, no, this is good. I'm going to take money out and I'm going to borrow money to buy more of this, Yeah, there you go.
There's a first for talking about fox and cat urine, like whatever urine we're talking about here. There's a split second, Russ, when you were talking though, I was like, where is he going with this, and how is this going to connect to investing? But it honestly does, and it works, quite well. It goes back to investors not actually doing their own due diligence and just following. And I think to be a good investor, you need to be a leader in your own right. Think for yourself. There's a bajillion products out there you can invest into. There's multitudes of voices, including all of us, who people might listen to. But at the end of the day, we talk about this quite a bit. We're not there with you 24/7. You don't even know when we're trading or buying or selling, certain investments in our portfolio. So Russ, let's say you bought that, that leveraged fund or that 3X fund, and you bought it on a Tuesday and you actually sold it on a Wednesday. But yet, some other guys like, oh, Russ is probably going to buy and hold this because most of his positions in his portfolio are buy and hold. Well, then it's shame on, the person who bought it. And I hate to see, investors, on any community, whether it's on YouTube or on Blossom, or they just come in and they blast you for buying something or selling something, but yet they don't do any real inquiring as to how that fit in nicely with your portfolio. What was your actual thesis? We just see that all the time. And I think it loops back to, the tribalization. And two, I feel like there's such a need these days to feel included. And so whatever the hype is, our necessity to feel included will have us run towards danger. I feel like so many more investors have to understand that 90+% yield is ridiculous. But yet people will be like, no, I'm going to invest into it. I mean, everybody else is doing it. And I feel like if Charlie Munger were on this podcast, he'd be like, well, everybody else is stupid. Like he would just outright say that. And, but I think that's the truth. If you're investing in products because someone else said to do it, well, you're, and just put it the way that I like how Charlie Munger spoke more than I did Buffett. But you're just stupid. That's stupid, right? That's the stupidest thing you could do. And
they talk about lemmings off a cliff
is weakness.
Yeah, they talk about, again, lemmings off a cliff. And Warren even said that some of the biggest gains are made away from the herd. But guess what? Away from the herd, it's risk. It doesn't feel safe. It's cold. You feel like you're wrong. You're out by yourself, and it takes a lot of balls to do that. And some people just want the safety of the herd, for better or worse. And some of us do too. It's hard. It's I guess that's life, right? Trying to find the answers to these questions that sometimes don't have any easy answers.
Well, there's more than one way to do things. That's what makes it tough.
Everyone's always trying. No, everybody always quotes Buffett. They quote Munger. They quote whatever, you feel investor X, right? Some big investor. But then when you you look at someone's strategy and you're like, dude, your strategy is the most average strategy in the world. You've taken no risk. Like Warren Buffett has taken quite some big risks, right? Not the Warren Buffett that we all came to know eventually, but earlier on in his career, he didn't have the millions of dollars. Like it was like I think that's what people fail to understand is like we typically will look at some of these investors and see them for who they are now. But I always think it's more important to look at the investor on how their come up looked. So Buffett, for when he was on the come up, if you will, he did take some risks. He took some pretty big risks. Even investing into the Washington Post, that's a pretty big risk. But he took it. And one might say that was stupid. One might say that, that was smart. And you're going to have a million different viewpoints on it. But only now it's the Monday morning quarterback coming in. Oh, no, Buffett was great. He played it safe the whole time. According to whom? I would say that back in his earlier years, he did take risks. He talks about one of his first investments, and he even invested on behalf of his sister in some company, and he lost his sister's money, and that's when he was like, now I really realized when you have other people's money in mind, you can't just throw money in there. But I think it's so important, I think, to really realize what you're doing, how you're investing, and take your risk, whatever that comfortable amount of risk is for you, but don't follow the herd for the sake of following the herd. Because the other thing that happens with that is at the end of the day, someone always has to take accountability. And I'll tell you what, if you're following me and you lose money, I'm not taking your accountability. So I think the other part of this is people are weak and they don't like taking the accountability. So it's easier to follow a Ryan, a Russ, or a myself and just be like, because of them, I lost my money. No, 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 no. Because of you, you lost your money.
Yeah, you remind me of that saying that wherever you are today, look around you. Wherever you are, everything you have is the culmination of every decision you've ever made, which can be terrifying, but I think it's liberating because if you are where you are because of every decision you've made, if you want to be somewhere different, if you want something different, you're going to have to do something different so you can have the control and the power to make different decisions and change the course of your life. And Ryan, I know you read Snowball. I don't know if it's a big book, Ari. I don't know if you read Snowball either, but I think that first company was a utilities
Buffett
company,
book, right?
Yeah, and it made me think.
I read it because I saw it. Ryan talked about it, and then I didn't think it was that big of a book. But my ex actually brought it for me from London, and she was like, "This is the biggest book I ever had." It was like
she had to bring it in on a wheelbarrow.
But
get a dolly.
What I got from reading that is I'm like, oh my God, all the stuff he did to get where he's at, I don't think I would want that life. So like you said, Ari, you can't just cherry pick what somebody has and not take everything. It's like either all or nothing. And man, the things he did, I'm like, yeah, I wouldn't have done that. There's no way. And I don't think I would want to do it.
Yeah.
Well,
I agree. And it's funny because I think I could totally. Oh, go ahead, Ari.
I was just going to say, would either of you work until their 90s?
If I loved it.
Yeah. I mean, same here, kind of going back to my, dream family office down the road. It's like, yeah, I could do that well into old age. I'm going to be doing this for the rest of my life. And so like, if that ultimately became like my work, then yeah, totally. I mean, even what we're doing now, having these conversations and talking about investing on the internet, I will do this in whatever capacity I can, as long as I have the faculty to do so, and as long as people will have me. 100%. I love it. Absolutely love it.
Yeah, again, thinking of my grandfather, he worked till 6 months before he died at 92, and he was a real estate agent. He was a realtor, and he loved it. He just wanted to keep doing it. I remember asking him when he was in his 80s, I'm like, you going to retire? He's like, why? He's like, I love it. I love getting up, getting dressed, being the first one in the office. I get the paper, I get to talk to everybody, and he started a capacity of helping the younger generation with, he wasn't good with computers and all that, but he had the knowledge and 50 plus years of experience that he could share with some of these people coming up. But again, that made me think like, oh, so if you love something and you're physically able to do it, why not? So yeah. This I won't be able to do till I'm 90. Oh my God, no way.
Well, by then, man, we'll be able to talk through like, you'll have like some AI avatar version of yourself.
I meant what I'm doing, like my welding, like working outside. That's what I meant.
Russ,
sitting in front of a camera, I can do that. No problem.
I just pictured you, in your 90s, instead of like sliding into the screen, like you wheel out.
Just.
I'll just have my AI companion. I'll have the robot, the Tesla robot.
He's going to come in on his hover walker, jet powered hover walker. Or hover wheelchair or whatever, just floating there.
We laugh now, but I feel like that's already like being manufactured somewhere.
Yeah. Oh, you guys might hear baby in the background.
I'm reminded of Back to the Future. All the things we saw in Back to the Future, which was at some point like crazy, right? It's like actually it's all here now. Like we're living that. It's just crazy to think about. And that's why I am, just very gung-ho about, really it's tech and growth for me these days, because I just can't picture a world where we're slowing down at all. I just continue to see us picking up. AI is freaking nuts. I don't even like it. I don't like it one bit. I don't like that AI can now like generate a me and actually look pretty realistic on screen. I don't like that. I think that's terrifying. Can I stop it? No, so I'll invest in it. But it's just crazy. I used to, as a kid, to be honest with you both and everybody out there, I used to be terrified of the future. I really liked the way things were, when I would think about the future, it actually scared me because I'm like, it's just terrifying to think about like how fast time is going by and how we're progressing so rapidly. But like just to think about the fact that you could put a picture now into AI and then it can make me dance and move and speak and it can have my voice. That's terrifying for me, you know, as someone who likes to do this stuff with you both, you know, like, I don't know.
It's just,
It's
you know,
funny,
Ari,
man.
I think, oh, go ahead, Russ. I'll jump in after.
Oh, I was just gonna tell him I goof around with my wife and use it. Like she's a fan of Elvira, so I'll like send her a picture. I'll like have a picture of her, and I'm like, dude, remember when you met Elvira? And she's like, stop it, it looks creepy. I don't like it. She's like, it's weird. And I was like, you know, but are you actually funny thinking about being afraid of the future? There's that quote, something like, the past wasn't as good as you think, the present isn't as bad as you think, and the future will be better than you think. So kind of in those lines.
And I think too, Ari, I think
that's
we're,
the AI version of me that's going to have the better future.
I think you and I are at an interesting age too, Ari, where we're starting to get to the point where we're really feeling nostalgia for maybe some of the things that we, you know, we grew up with. And it's not just you and me, but like people around our age group. Like I see online all the time, people, you know, going back and ditching their phones and pulling this bad boy out. And now they're listening to their music again on this, you know, and a lot of people are rediscovering some of the music back then. And we're at a point now, like just talking about music, we could even do movies. Like I remember being a kid, you know, 20 years ago, being, you know, 12, 13, whatever, and hearing my parents talk about the Cars or Van Halen or, you know, talking about 80s music with all this nostalgia, and being a kid being like, yeah, it's okay, I guess. But like, you know, what's really cool is like All American Rejects. And now today being 32, it's like, that's our version of that. 20 years ago, they put out Swing Swing. They put out that album, their self-titled album. It's probably more than 20 years ago, actually, 23 years ago. But we're kind of at that point now where we're starting to feel those things, and maybe just maybe, not that we feel old, but maybe there's, and Russ, I'd be curious to get your perspective too and how you think about this, because I mean, you said you're about to be 48, and I know you get this all the time. You don't look it, man. Like, you look the same age, I think, as both Ari and myself, early 30s. So, round of applause for you there. But, you know, I think we're kind of getting to that age where we're maybe starting to feel some of those things. What do you guys think about that? Russ, what's your perspective on this? Have you felt that way? Do you feel that way now? What do you think?
And Russ, if you can also just drop the aging secret on like how you keep yourself so young, we'd also love to know that too. So just feel free to sprinkle that in. Like, are you using, you know, aging cream products or
Fox urine?
Yeah, I don't know, hard work and genetics and, you know, a little bit of pickled. I don't know, but yeah, I mean, it's funny that you say that about All American Rejects. I was in my, I don't even know how long ago was that.
Yeah, it was 20 plus years ago, man.
20 plus, yeah. So for me, it's crazy because
put out their self-titled album in 2004, I think. I mean, Kanye West put out Gold Digger, I think, in like 2006. I mean, there's so many examples of that happening now.
Well, what's crazy
like
for me is I first started listening to a punk band. I love NoFX in 1993. So for me to think that was over 30 years ago is just, it's just mind blowing. But what was the question again?
Just nostalgia, like, you know. Did you? I don't know if you can go back around the age that Ari and I were at, you know, early 30s. Do you remember? I guess do you remember when you started to feel that kind of I don't want to say the longing for the past, but realizing like, holy cow, I can't believe this was 20 years ago. And do you feel it now?
There. Yeah, it's always there. It never goes away. And dude, one of the things that always sells, people connect to, is nostalgia. People love nostalgia because, again, everyone thinks that the past was so much better than the present and the future is going to be. But yeah, you have that connection to it. And I don't know, it has to do with investing, but I love talking about it. And I don't know. Well, nostalgia sells.
I think it does kind of tie back to investing, or it can. You know, if we go back to talking about Warren Buffett, you know, obviously we always, you know, he's the Mac Daddy of this whole thing. He's the guy. Him and Charlie are the guys that we look up to, and I think there's a lot of I don't want to say nostalgia for that because we didn't really experience it at our age, but you know, I think it's easy to look back on their investment history and glorify it, or just look at how cool it was, and it really is. You know, it really is incredible. But I also think it's important to remember or to keep in mind that investing today, not only investing today, but businesses today are so different than they were back in like, his golden days. And maybe you could argue that there were always golden days because he made pretty good decisions along the way. But if you could just go back to like, the 50s and 60s and 70s when he was first getting into this and um, getting his first reps in, the businesses then were so different than they are today. Very much more capital intensive, very brick and mortar. And it's like kind of the opposite today. And this kind of, is to Ari's point about tech. It's like the businesses of today are pretty much the opposite of that. The whole goal is to like grow your business with the least amount of capital possible. And now, especially for investors who are really, really catching on to Charlie's way of thinking and just looking for that silver bullet metric, the return on invested capital, that's even becoming more the case for these businesses, is how capital light can we be to really, further growth. And you see a lot of that in these high tech businesses, which is interesting now because that's actually kind of starting to change, at least in certain parts of it, like in the semiconductor space. But if you look at the software space and other tech companies, it's the complete opposite type of company that Buffett was investing in his early days.
I got
Well,
you.
you know,
I
it's
got you.
also
So I don't know if Golden Days is you're trying to drop a Panic at the Disco reference, but I don't. I just know my daughter has a Panic at the Disco shirt that says Golden Days, and it's funny
Same thing.
because
I think their first album came out in 2006 or 2007 as well.
yep. As I hear your daughter in the background, I love it because again,
Oh,
my
you can hear her
daughters are
back there?
18 and very faintly. My
She's
daughters are
talking.
18 and 17, and I think I know where I wanted to say that about nostalgia in the past is that it's fun, and there's been rabbit holes I got where I get that wistful longing for the past and how things were. But the problem with that is you lose the day. Like the past is done and gone. Any decision, that's all back there. You can't change a damn thing no matter what. And there's plenty of things I wish I did different, but what you truly have control over is like right here, right now, the decisions you're making today, and not even really the future, because there's, like tomorrow, like free beer tomorrow or whatever, that the future's always in the future. You're only in ever the present, right? Can't be in the past, can't be in the future. You can only be in the present, which I think is why people say it's a gift because you have it here today. So, yeah, it's fun. It's nice to go down those rabbit holes of nostalgia. I do it myself. I play Pee Wee. Dude, I love the Pee Wee outro at the end of the live streams. But again, it's just what are you doing today? If you want something different in your life, you have to do something different. No one's going to do it for you. And that's kind of what I learned. My wife and I wanted to change about 10 years ago. Didn't like where things were headed. So we both made different decisions and, we have something different now.
also just want to say, I feel that when I look around today at like icons, if you will, like, we could stick to just our, investment world. I think what's crazy for me is I'm like not impressed by like those on the come up of the investment world. Like I can't even think of a single person, that I'm like, oh, like this guy. Like our North Stars are like still Warren Buffett and Charlie Munger. And I can't think like like, okay, yeah, I have some people I'm fond of. Bill Ackman, I'm definitely fond of. Ken Griffin, I'm definitely fond of. There are business icons that are out there, but like I don't know. I feel like when I look around, even if you take, for example, now pop stars and stuff, like I don't look at any. I'm not like these are great musicians, right? Like I go back right to my father's generation actually, and all my fond memories go back, to those driving the car with my dad. Listen to like Bob Dylan, and some certain Bob Marley. My dad would play a lot, and like that was music to me. And to be honest, like I only got into the Blink 182 and all that because my older brother. But I've always been really an old soul, and even when I think about the world of investing, I look around. I don't know. Can either of you really name someone now who comes to mind quite strongly that you're like, this is kind of our generation's like new Warren Buffett, if you will? Like I don't think they exist.
No, I don't think they
And that's
exist.
kind of sad
I
to me.
think yeah, it's I think it's going to be incredibly hard to find, at least for now and for the time being. It's going to be hard to find someone who's been as impactful as he is. And I think a reason for that is because everyone so far that's come after him and has been investing like in the same, time period as him, because he's still alive and kicking. They've all been inspired by him. It's kind of I don't know. It's pretty much all he's the source, and everything else has come from him. Does that make sense? I think that's part of the reason why, and I think it's going to take a lot of time till we find someone who's as impactful, if we ever do. That's not to say that others aren't, but it's like it's more so just that they're carrying the torch, whereas he really paved the way.
Maybe there shouldn't be a next Warren Buffett. There should be a first again, Bill Ackman.
Yeah.
Be a first Ari Gutman. Not,
Yeah.
you know what I mean? Like it's easy to say that where you want to be the next this and that, but yeah, I don't know where it goes from here. And
No, but that exists too, man, and that's important too. And people can be impactful in their own ways. I think we can, not to grandize ourselves or whatever the phrase is, put ourselves on a pedestal, but like think there are a lot of people who started investing because of the way that we said a certain thing here on the internet, and maybe it wasn't an original thought. Maybe the thing we were saying that really turned the lights on for them was something that came from the source, that came from Buffett himself or Munger, but there was something about the way that we said it or the way that we presented it that really clicked for that person. And yeah, to your point, Russ, I think that's important to really lean into trying to be the first Russ or the first Ryan or the first Ari, instead of I know what you're laughing about. I hear back there too. Instead of being the first, or instead of being a copycat of someone else.
And actually, one more thing I'll say is that just like the podcast and YouTube, it's so fantastic because all these, again, Josh Brown, Boromir Baranowski, God and Bade, you can hear all these people on podcasts sharing their thoughts. And it's so cool that I just pull little bits and pieces from them. And it's funny, if I listen to 100 investors and I take a little bit from each of them, then I'm probably going to be my own unique investor coupled with my experiences. Yeah. And I think that's what makes it so fun, and it'll make life interesting. You don't want things to be too predictable. I get boring.
Yeah, well said. Well said, man.
Agree. With that, we're just about at the hour and almost 20. So I will say to all those still listening, thank you so much for tuning in. And of course, drop all your comments down below. Russ, absolute pleasure, man, to have you in the deep end with us. And we hope to have you on, again with us. Ryan, any last thoughts? Russ, last thoughts before we close out?
I just want to say I'm so glad that we made this happen. Russ, thank you for taking the time. Please definitely hop back on with us soon. We talk often, but it's always a blast being able to chat with you, especially in this format. So thank you for taking the time, man. Appreciate it.
Absolutely, man. I guess if I had the one last thing to say to takeaway, just remember, if you want something different, you have to do something different. So what are you going to do that's different today?
Powerful. Investors, until the next go round here, the deep end, we'll catch you all in the next episode.